Which strategy is better, ICT or anything else? And I say combine all your knowledge and experience and exposure and create your own edge. I used the ICT fair value gap entry today to get a short, but it also correlated perfectly with my trend line break strategy where I'm looking for, well, I'm looking for all the time charts that I use, tick charts in this case, to agree that there's a short going on right here. All the different time charts, right? That's the number one thing I follow. Which direction is the market going? And looking for liquidity sweep areas for it to target. And then I look for, fair value gaps and trend. I look for trend lines to break, and I look for a continuation. These circles are, this circle right here at the top is where I found a fair value gap. That's exactly where I entered the trade even before the trend line was broke. So there was a more precise entry by using the fair value gap. I'm just noting here with these circles that that's the first circle's where I got out, third circle's where my target was, and it went down to hit my second target, but I got out way too early. So let me just say that a combination of strategies into a personalized, unique edge that we can create for ourselves. Almost every course that I've seen, every program that I've bought, every chat room that I've entered are people who have taken strategies that they have learned and made them their own. And there are copycats who copy strategies perfectly, and there's nothing wrong with that. Nothing wrong with that at all. My thing is, I just don't want to copy somebody unless I absolutely love the strategy. I don't want to copy anybody. I want my own strategy. And I love the ICT concepts, and I love the moving averages. There's nothing like trend line breaks. Trend lines are some of the best ways to trade in the world, the most simple. But when you combine that with other things, descending multiple time charts, moving averages, and correlations on other time charts, with the trend line breaks, with the fair value gaps of ICT, you start just developing a sense of understanding and discernment and some trading wisdom, thank God. And you can make it your own. Make something your own strategy. Make your own edge by the grace of God. Anyway, we'll see you in the next video. Peace. All right, here's the moving average strategy with trend line breaks, but this time it's going short. And I think we all can agree the moving averages have crossed down. Price has crossed under them on all time charts, whether you're using tick charts or minute charts. We have the minute charts right here, starting with the 5-minute chart. You can see that price is crossed under, and that's the 15. Here's the 5. You can see that it's crossed under. Everything's going down. Here's the 1 minute. There's no doubt about it. Charts, it doesn't matter what charts you use, tick charts, minute charts, and this is all going down. Here's the 10,000, which is like the 15-minute, and all of them, all the way down to the 1,000 tick. And I almost took this trade on this consolidation breakout. Of course, I was wanting it to pull back up here first, but it didn't. And a good place to have got this would have been on the trend line break here, once it rolls back down over, or the trend line break here. Now with the moving averages, we're looking for trend line breaks that agree in the direction of the moving averages and price action. I just wanted to make this quick video showing that we're not always using it for the bearish side. And when it's time to go, the bullish side, when it's time to go bearish, we switch. And all moving averages and time charts have to agree. They all have to agree. So in other words, that's going to give us the best probability. In other words, if, well, you might say, well, these, on the higher time charts, this is not, the 20 is not crossed under the 50, and these are not under the 200. At some point, the higher up you get, you're going to see, that it's not crossed over yet. As high as up as I'm going is from right here, the 15-minute chart. And I use the 10,000 tick chart. Once price closes below these two, and they're both pointing down, that's all you really need, and so we can look for trades. Okay, So, you just had to get a good sense, feeling, discernment, experience, time of observation and practice, 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 and study, study, study to really get a feel that's accurate, more precise about what the trade is. Now, I was going to take this trade. I wanted it to come up higher, give me another trend line, like these, so that I could try to get in. Have my stop loss at the top of these newly generated buy-side liquidities, because that's all this is. When you think about getting the stop sweeps, the buy-side sweeps, the sell-side sweeps, which is all this could be, it could just be sweeping the sell stops here. When you think about that, there is a side to get on the right side. When it newly generates the pivots and the goal is somewhere else, for instance, targeting down here, targeting these sweeps down here, these pivots, if that's really, really where it wants to go, then we can get behind these and we'll be safe until it decides to come back up and take these out. So yes, we do. Everybody uses some sort of pivot as their stop loss. The question is, are we on the right side of the algorithm or not? Right? So every pivot is going to get taken out eventually. But there are pivots when there are points where it's not going to happen anytime soon. Okay, that's the side we want our stop loss on. Which pivot is less likely to be taken out? Is it these here? Or is it the ones over here? Which one's less likely to be taken out? Because if these are less likely, then we should be going long, right? So I think I'm going to be thinking about that in terms of that. I'm looking for this to come back up here. Sometimes things go so fast and the trend line is not very big and you're waiting on other time charts to agree. Like before, when this was still up here above the 50 moving average up in this area here, it was definitely not a time to try. Try to take that. In fact, let's take a look at that right here. Yeah, everything might agree on all the other time charts, but you got to have you have to have a time chart that you're trading focus. And the 15-minute is, and the 60-minute are my higher time charts. So I use the 15 when I'm trying to run some scalps. But on a 60-minute chart, you can also see though. Here's the 60-minute chart, and it's closed. It's broken a trend line. It's closed below the 2 moving averages, and they're heading down. And if we look at the 60-minute chart, we can see that it has pulled back to that 200 and even violated that 200, even though we're in a daily bull run. Even though we're in a daily and weekly run, it's quite likely that this could come down to that 200 moving average after such a strong move up. It may not anytime soon, but it may be the next thing on its agenda. So what are we trying to do? We're trying to follow the moving averages and trend line breaks and get into trades. The best thing is to go with the trend. All right. We don't always know which way the trend is, and fair value gaps are great to add to this. So for instance, if we get a trend line break and a fair value gap, then we really have a strong idea that it's probably going to keep going in the direction of all the time charts and all the moving averages, using fair value gaps, using order blocks, and all of that together, right? And we need to add as many tools and as much knowledge and experience and ideas that we can and narrow down our edge. We got to find an edge that makes sense to us, something that I can see, that I can believe in, that I can work with, and that I trust. And that's what we're doing with this moving average trend line strategy, incorporating the ICT strategies and the silver bullet trading sessions. That's what we do here. That's what I'm going to start focusing on, and try to master those simple things like that and start making money. I've got to pick something. I've got to pick a strategy and I got to stop trying to experiment with that things, more and more stuff. I've hit my max in terms of being exposed to different ideas, and there's a plethora, a myriad of ideas that are out there that you have not heard of. And there's a time when you got to stop listening to ideas and start implementing something, start activating something. And that's what I've decided to do now. I'm going to stick with what I like here. The moving average trendline strategy, multiple time charts, incorporating the ICT fair value gaps, order blocks, and breaker blocks, ICT strategies, and silver bullet strategies along with it. Incorporate all that together, and hopefully I'll have a strategy that I can believe in and trust and work with. All right, we'll see you on the next video. All right, I did what I said I was going to do. Hopefully this will work. I waited for the fair value gap to be filled on the 5-minute chart here. I had made a note. I wanted to come back up to this fair value gap right here. It came all the way up in this strong candle. I just took my chance with my stop loss at the pivot and just, now it's time to decide, am I going to be able to hold this? I want to go on break even right now. Let's take a look down here. I want to go on break even right now just because I haven't really thought, I haven't had a chance to think through where my stop loss is going to be. I'm going to close it.
Order filled.
I know that's ridiculous. I haven't had a chance to, it went so quick. It came up to where I said, I noticed at the last second, I said, wait a minute, is this actually going back up to where I had made a note on my chart? And I made a picture and I sent it into my files. I said, let it come to this fair value gap. It did. It was at the bottom of it. And I said, let's see if it tries to go deeper and deeper. When it got to the top of it, I just took my chance. It kept going up. And I had my mind made up that my stop loss was going to be up here. The problem I'm having with this trade is that I got out early again. Okay. Now I want to examine, and I didn't really think about where my target was. I didn't really have, the most important thing was getting in the trade and just putting my stop somewhere that I thought was reasonable. I did that. I'm happy about that part of this trade. Okay. But had I thought it through a little bit more, I would have had my profit target. Let's see how this works again. Yeah, I would have had my profit target set in the trade. Okay. So let's see. I got in here. My profit target was way up here. I only got half of what I should have been shooting for. Let's see where I really want to see. Stop loss was there. Yeah, stop loss was at this pivot right here. I got in right here. And yeah, it almost come down to one target there. Yeah, that's where my stop loss was, up here. Profit target was right here. And I would have hit it. But I got out about halfway. Let this video help me improve on that. And this might be a breaker to the upside. No, yet it looks, if that's the pattern of a breaker to the upside with a fair value gap, it could be coming down to that. That should have been my target, was this fair value gap. This is a bullish breaker, but that doesn't mean it's going to go up. But it's at a place where it could. That's a different matter. The point of this video here is to show that I did wait until it came back up to the fair value gap on the 5-minute chart. I'm very happy that I did that. You don't understand. Like, that's a big thing for me. Look at that move it could have been. Mamma mia. Nice. If I would have just, I am so glad to see that, because now I can really think you're onto something with the trade entry, but holding it needs to be massively improved. That's my trade for the day. I don't even know if I want to take another trade. I'm trying to reduce all my trades down to just good A+ trades, at least A+ entries, while I work out the bugs, the emotions, the insufficiencies of my exit strategy. I think I could have left that on break even, man. I could have left that on break even. I don't win enough yet to let the wins just be mundane. They're exciting to me still. And that's the sign of just an inexperienced winner. I haven't won enough for it to just be regular routine. right? So the wins are so exciting that I just want to jump on it and take it, and revel in the moment all afternoon. Oh, I won today. Hopefully, eventually, they will be so commonplace that I will just be able to manage it with very accurate, precise, psychology and control of my emotions. There goes target two. Target two would have been hit. I probably would have got out right there. There's no reason why other than just pure enthusiasm that I got out of that trade. It never really, each candle is making a lower high, except for now. This is the first candle that has made a higher high. All these candles, every single one of these candles has made a lower high. A lower high could have trailed it, boom, 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 all the way down to this green candle here. The green candle that I got out on was not a higher high than the previous candle. Each candle made a lower high. So I want that to sink into my brain, my thinking. Next time I get the entry correct. Wow, I'm still amazed by that. I got to get past being thrilled that I actually had a good entry. And by the way, the entry was ICT fair value gap. Okay, the only one I see on the 5-minute chart during the silver bullet session. So during the silver bullet session today, 10 a.m. right here in the morning, you can see that price shot right up to a fair value gap. As soon as it did, I went short. Why did I go short? Because on all the time charts that I'm observing, every single one of them is showing a downtrend. And I use the tick chart. So we got the downtrend here, all the way, you could use the 15 minutes, 5 minute, 1 minute, whatever. But they're all pointing down. So when it did bounce right here in the silver bullet moment, I looked for a place to go short, and I used the ICT fair value gap right there. Boom. The space between these three candles, the middle one. I went short, put my stop up here, and it went down. But the problem is I got out before one target because I was too excited, too happy, too thrilled that I actually got the entry right. Over time, getting more and more entries correct, the thrill should go away. It should be normal practice. And it just goes to show you how new to winning I can be. I am still. Anyway, that's the silver bullet trade for today right here. And I wish I was still in it. The good, the bad, the ugly with the trade. The good thing that I did and the bad thing that I did. I hope that helps. Silver bullets are one of my favorite times to trade. And the strategy with that fair value gap is just beautiful. All right, we'll see you on the next video. Peace. All right, what I like today also is my reluctance to just jump in a trade that I normally would have done before in my video game mentality. For instance, we have on the 1 minute chart, we have a fair value gap. And we have an opportunity to catch the bottom here. This is a sweep. This is a low sweep. An aggressive turtle soup player probably would have tried to buy that sweep of the bottom, and then they'd still be in this trade. Another one is looking for a breaker where we have a fair value gap created, and it's very tough to see. We almost have a double bottom here, and it's finally broke this high. It broke structure right here, in my opinion, and it did create a fair value gap. And what we have is a double fair value gap in a sense that the bearish one was broken to the upside, and the upside one looks like it wants to hold. Now, it could break right here. If it closes below this fair value gap, then the whole thing is just blown to pieces. Because the only way to go long on this is to have a structure that breaks, a breaker block, structure break, fair value gap respected, and to have it go up to the upside. But I have not jumped in any trades based on the 1 minute chart only. I used to just see something on the 1 minute and go, okay, I gotta get that. I gotta try that. But when everything else is still down, bearish, 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 and all my time charts are bearish. I'm not going to try, and I'm not going to try to buy this. I mean, it definitely could be sweeping and rotating up, but I have got to make my mind up what strategy I want to pursue right now to make money. And once I get paying my bills going, I can try new things. I'm not going to be video gaming it anymore. So what strategy am I mostly using? In combination with ICT concepts, I'm using trend line breaks and multiple chart moving average correlations where multiple time charts are all agreeing in the direction of the stock. And that's, once I see that direction agreement, then I start looking for sweeps. I start looking for liquidity sweeps. Here is an example on the 60-minute chart. We did take out that first one, but there's several layers down here more. This thing can keep going down. Day chart is just one red candle, right? We've got this whole ledge right here that could be swept. That's the weekly low. And it's possible that it could be just going back to the 20 moving average here. That's one possibility. We know eventually and believe that it's going to take out the highs. We're in an all-time high market. But temporarily, I think it's going to take out some lows. That's just my opinion, and I could be wrong. But I'm going to be using my moving average strategy to help me understand that. And what that means is all my time charts have the moving averages going in that direction. Whatever, I know they're lagging indicators, but the target for these liquidity sweeps are not lagging. This is an actual target. This is an actual place that price could easily go. And even though it's lagging, these moving averages are telling me that that's where it's headed. There's nothing wrong with lagging indicators, unless you use them by themselves. But when you combine it with liquidity sweeps, bias directions, fair value gaps, all this stuff, then they become useful. Very, very useful. These white lines right here, these lighter color lines, are liquidity sweep areas, right? I could easily shoot down there. And now that it's disrespected that 1 minute chart, the only thing I could find was a 1 minute chart, fair value gap, and that hasn't even held up. And now it's just continuing to go sideways. I was giving it a chance here. I found a break of structure. I found a fair value gap, and it just blew right through it. And it may be signaling that it wants to go lower. Regardless, I really can't take much of a trade here, and if it was a trade, it's going to have to be short. A trend line break with the direction of the multiple time chart moving averages all correlating and saying the same thing. That's the trade that has the highest probability in my opinion. Any one of these trend line breaks right here would have been okay. If I took this one here, stop would have been above this area here, and I would still have been in that trade all the way down here. Trend line break here, depends on where you put your stop. If I put my stop up the top, or if I put my stop underneath over that candle, the target's still going to be down at the bottom here. And as it starts to move down past it, then we take our stop loss and slowly bring it towards break even. Breaking even is much, much better than a loss. And I think with my strategy, I would have more break evens than anything. More break evens than losses, more break evens than wins. That's just some more thoughts on the trading attitude today, what I'm learning, what I'm doing, how I'm trading, what I'm trading, and my commitment to finding my own edge using strategies that I practice every day instead of wandering around, being blown to and fro from one strategy to the next, not really committing to anything. So we are committing to the moving average trend line strategy in combination with ICT concepts, putting that together to create my own edge in the market.